is Shannon Tiezzi from the Diplomat, and I'm very pleased to be here at the Brookings studio to interview Dr. David Dollar, who is a senior fellow at the John L. Thornton China Center here at Brookings. Dr. Dollar, thank you for joining me today.
Happy to.
Dr. Dollar, what do you make of those who are already calling the Hu Win era a lost decade? Do you think this is a fair assessment? And if so, what specifically made the Hu Win leadership so unsuccessful?
It's a little harsh to call it a lost decade. There certainly were some important accomplishments during the past 10 years. Hu Win 1 eliminated the agricultural tax, which had been a burden on Chinese peasants for thousands of years. They instituted rural medical insurance. So I think there are quite a few things they did in the social realm, and a lot of poverty reduction occurred during this past decade. So I wouldn't call it a lost era. What people are frustrated with is that they missed an opportunity to vigorously pursue economic reform. They took over shortly after China had joined the WTO, and many of us thought that would be a stepping stone to China opening up more and developing a liberalized financial system and really integrating with the world economy. And in many ways, they missed that opportunity.
And there's been a lot of talk now under the Xi leadership of continuing this process of opening up China's economy to the rest of the world. But at the same time, we're seeing a lot of high-profile price fixing and corruption cases being brought against foreign firms, for example, in the infant formula sector, in the pharmaceutical sector. How do you reconcile these two seemingly opposing trends?
Well, I think this points to a fundamental contradiction in China. The leadership would like to open up more. They would like to get the efficiency that goes along with a well-functioning market economy. But a well-functioning market economy is based on private property rights and rule of law. It's difficult to have that in China without political reform. You don't have an independent judiciary, for example. So these cases you mentioned, it's hard to know if these are fair prosecutions or if these are politically motivated. And this new leadership does not show any inclination so far of an interest in political reform. They're taking a pretty firm line on political issues while they say they're going to open up more, and they have done some initial measures that clearly are opening up the economy more. So they're trying to pursue what I view as something of a contradiction, and I think further down the road it'll be very hard to both develop a market economy and refrain from political opening.
Do you think that China's leadership is serious about letting the market play more of a role in their economy, especially in the financial sector?
I think they are serious, but subject to the constraint that we just discussed, that they really are, for the moment, not touching any political reform. But they would like to get more efficiency that comes with a market system. So they would like to open up more sectors of the economy. They say they're going to liberalize the financial sector, meaning liberalizing interest rates, letting the capital markets develop more, hopefully opening up to more foreign investment in financial services. So I think they're serious about pursuing those reforms over the next few years. So many observers are cautiously optimistic that we'll see more progress with reform now.
And if China does embrace an increased role for the market, do you think this will in any way change China's behavior in international organizations like the World Trade Organization or the IMF?
It should. In my view, big developing countries, not just China, but a number of big developing countries, have really played an unhelpful role in the World Trade Organization over the past few years, in the sense that we really need a new round of trade liberalization. Developed countries, they still have little bits of protection in place, but in general, developed countries are very open. And so the next stage of reform, we definitely need China, India, Brazil, other large developing countries, have to open up more if there's really going to be progress with global integration. Until recently, we've seen a lot of resistance. Hopefully, if China is really pursuing more openness on its own over the next few years, it would be logical for them to be more open to trade deals at the regional level and the international level.
China's leadership recently concluded their Central Economic Work Conference, which set economic priorities for 2014. What did you make of their repeated emphasis on both reform but also stability? How is China going to balance these two different priorities?
I think all the statements we've seen recently reflect a certain compromise. So that's true for the Central Economic Work Conference and also for the recent third plenum. The documents definitely make statements about moving ahead with reform, which is encouraging, but they also emphasize things like stability, or in the case of the third plenum, they emphasize the continuing dominant role of public ownership. So I see these recent statements as a compromise, reflecting that there are real differences of opinion about how quickly to move with reform. On this stability versus reform issue, I think the leadership understands the growth rate needs to slow down some as China reforms and transforms its growth model, but they don't want to see growth slow down too much. So these statements are reasonable compromises. They would like to see a healthy growth rate, but some of the reforms are going to be a bit disruptive of the economy, and it's likely the growth rate's going to slow down somewhat.
Now, Shanghai's new free trade zone is considered a potential testing ground for a lot of the financial reforms China is interested in. So based on that, how would you grade the performance of this zone so far?
I think it's a little too early to give it a grade. Personally, I think it's a little bit of a strange animal. A lot of the reforms that China needs now really are inherently national level reform, like liberalizing interest rates or introducing more flexibility in the currency. It'd be very hard to do those reforms in one small zone. You can't have a different exchange rate in the Shanghai zone compared to the rest of the economy. That would be quite disruptive. So I think it's good that the leadership, wanted to announce something bold and associate themselves with Deng Xiaoping and the earlier special economic zones. I'm not sure the reforms they need right now are best tried out in one small location. So I hope that this is a sign of their willingness to move ahead with reform, and that quickly these ideas spread beyond Shanghai zone to other locations and to the whole economy. If it's just there in Shanghai for a while, then it's really hard to see how it'll have much effect on the economy.
Well, thank you so much for joining us, Dr. Dollar.
Very welcome.
And thank you for viewing. Once again, I'm Shannon Tiezzi from The Diplomat.